Did you know that a handful of finance geniuses almost crashed the entire world economy in just a matter of days? It sounds like the plot of a Hollywood thriller, but it actually happened, and the consequences were almost catastrophic. This is the story of long-term capital management, LTCM, the hedge fund that went from being Wall Street royalty to a cautionary tale, practically overnight. Their rise and fall is a lesson in hubris, risk, and the limits of even the most brilliant minds. Let's set the stage. It's the booming 1990s, the markets are soaring, optimism is everywhere, and LTCM is run by Nobel Prize winners, math wizards, and ex-Salomon Brothers hotshots. These were the best of the best, the kind of people everyone wanted to work with, or invest in. They promised investors steady profits, come rain or shine, using computer models that seemed bulletproof. Their strategies were so complex, most people didn't even understand them, but that only added to the mystique. For a while, they were untouchable, raking in 40% returns a year. Investors lined up to hand over their money, convinced they'd found the secret to endless wealth. People thought these guys had cracked the code to risk. They were celebrated in the press, envied by rivals, and trusted by the world's biggest banks. But here's where it gets wild. The very thing that made LTCM so successful would soon become their undoing. LTCM's strategy relied on borrowing mountains of money, over $100 billion with just $4 billion of its own cash. That's leverage on a scale that's hard to even imagine. They were playing with fire, but they thought their models could control the flames. They bet that certain markets would always revert to normal. In other words, they believed that no matter how crazy things got, the world would eventually make sense again, and they'd profit. But when Russia defaulted on its debt in '98, markets went haywire. Suddenly the unthinkable happened. The models stopped working, and the world didn't return to normal. Suddenly, all those supposedly safe bets blew up at the same time. The losses were immediate, massive, and totally unexpected. Within weeks, LTCM lost nearly $4.6 billion. Years of careful planning and mathematical precision unraveled in a matter of days. The dominoes started to wobble. Each loss triggered another, threatening to topple the entire financial system. Their trades were so huge, their collapse threatened to drag down banks, pension funds, even the global financial system itself. The risk wasn't just to LTCM, it was to everyone. The Fed had to step in. The situation was so dire, it required government intervention to prevent a total meltdown. Picture it, 14 of the world's biggest banks, huddled in a Manhattan boardroom, forced to bail out a private hedge fund just to keep the system afloat. It was a moment of panic, secrecy, and high-stakes negotiation. What went wrong? How could the smartest people in finance make such a colossal mistake? Confidence, hubris, the belief that you can outsmart the market, that your models are infallible, that you're immune to disaster. That belief that you're smarter than the market. It's a dangerous mindset, and it's brought down more than one financial empire. LTCM's models worked until they didn't. The world is unpredictable, and sometimes the impossible happens. The world is messy. Black swans happen. Events no one could have predicted can change everything in an instant. Even the brightest minds can overlook risk hiding in plain sight. Sometimes, it's the things you don't see coming that do the most damage. LTCM's fall taught everyone a lesson. Leverage is a double-edged sword. It can multiply your gains, but it can also magnify your losses beyond imagination. When you bet big and lose, you don't just lose your own shirt. You can put the whole system at risk. The ripple effects can be felt by millions of people who had nothing to do with the original gamble. And that's why financial history matters. It's not just about numbers, it's about understanding the dangers of overconfidence and the importance of humility in the face of uncertainty. So next time you hear about a new can't-fail strategy, remember LTCM. Remember that even the smartest people can get it wrong, and that the consequences can be bigger than anyone expects. If you want more stories like this, hit subscribe and don't miss what's coming next. There's always another lesson to learn from the past.